not going to hit it. But it hasn't arrived yet. People have stockpiled and front-end loaded their activities to make sure that we didn't.
The Bank of Canada reduced its benchmark interest rate by 25 basis points on Wednesday, a move observers had almost universally expected amid various signs of economic weakness. The bank cited the weakening economy and less upside risk to inflation in its decision to cut. Looking ahead, the disruptive effects of shifts in trade will continue to add costs even as they weigh on economic activity, the central bank said in a statement alongside the decision. For many economists, today's decision was a foregone conclusion following Tuesday's unthreatening inflation data, and the debate had turned to the extent of cuts in the meetings to follow today's. With core measures of inflation likely to cool further in the months ahead thanks to the slack building up in the economy and the removal of many retaliatory tariffs on September 1st. We not only expect a 25 basis point cut tomorrow, but also a further reduction at the October meeting, CIBC economist Andrew Grantham wrote on Tuesday. In its July decision, the BOC held rates steady at 2.75% for a third straight meeting. Follow Yahoo Finance Canada's live blog for news, updates, and analysis of the Bank of Canada's interest rate announcement below. Follow Yahoo Finance Canada's live blog for news, updates, and analysis of the Bank of Canada's interest rate announcement below. BOC unemployment conditions. In its announcement, the BOC points out that job losses have largely been concentrated in trade-sensitive sectors, while employment growth in the rest of the economy has slowed, reflecting weak hiring intentions. The release notes the unemployment rate has risen since March, hitting 7.1% in August, and wage growth has continued to ease. Key takeaways from Macklem's prepared opening statement when he speaks at 10:30 a.m. on Canada-US trade war. The Canadian economy is being affected by both U.S. tariffs and the unpredictability of U.S. trade policy. Tariffs are having a profound effect on several key sectors, including the auto, steel, and aluminum industries. Chinese tariffs on canola, pork, and seafood, new U.S. tariffs on copper, and higher U.S. tariffs on softwood lumber will spread the direct impacts further. Consumer prices may spike without warning. The disruptive effects of shifts in trade will add costs, even as they weigh on economic activity. It is difficult to predict the extent of cost increases, where they will show up, and how they could be passed through to consumer prices. A clear consensus to cut. There was clear consensus to lower our policy rate for the first time since March. We will continue to assess the impacts of tariffs and uncertainty on economic activity and inflation. What the BOC is watching for. In its press release announcing the rate reduction, the BOC says Governing Council will look at how exports evolve in the face of U.S. tariffs and changing trade relationships, how much this spills over into business investment, employment, and household spending, how the cost effects of trade disruptions and reconfigured supply chains are passed on to consumer prices, and how inflation expectations evolve. Underlying inflation around 2.5%. BOC. A broader range of indicators, including alternative measures of core inflation and the distribution of price changes across CPI components, continue to suggest underlying inflation is running around 2.5%, the BOC's release says. The federal government's recent decision to remove most retaliatory tariffs on imported goods from the U.S. will mean less upward pressure on the prices of these goods going forward. BOC on its rationale and looking forward. With a weaker economy and less upside risk to inflation, Governing Council judged that a reduction in the policy rate was appropriate to better balance the risks, the release says. Looking ahead, the disruptive effects of shifts in trade will continue to add costs even as they weigh on economic activity. The numbers behind this morning's BOC rate decision. Here are the latest data the Bank of Canada has to guide its interest rate decision this morning. The removal of the carbon tax in many Canadian provinces continued to bring down year-over-year inflation figures in August, but the effect was less pronounced than in July. Inflation rose to 1.9%, slightly cooler than what economists expected. CPI, 1.9% up from 1.7% in July. CPI median, 3.1% steady compared to 3.1% in July. CPI trim, 3.0% down from 3.1% in July. Canada recorded a second straight month of net job losses in August in what one economist calls the clearest signal of a stalled economy. Jobs, net loss of 65,500 jobs from the economy, Unemployment rate 7.1%, up 0.2 percentage points from July. Canada's economy shrank 1.6% on an annualized basis in the second quarter, with trade war effects highly concentrated in that period. Q2 GDP 1.6% decline from previous year. Consensus was for a 0.5% drop. June GDP minus 0.1% from May. Economists had largely expected no change. Why the Bank of Canada loves its core inflation gauges and how they work. Bank of Canada policymakers often refer to preferred measures of core inflation as key metrics behind rate decisions. They use a trio of modified CPI baskets to strip away different types of price volatility. These include CPI trim, CPI median, and CPI common. Here's how they work. CPI trim. This measure trims away 20% of the weighted monthly price variations at the bottom and top of the distribution of price changes. By removing this volatile 40%, policymakers can filter out things like the impact of severe weather on food prices, for example. CPI median. This looks at the middle value of the price changes for all items in the CPI basket when they are ranked from lowest to highest. The aim is to eliminate big price fluctuations for a reading on a typical item in each category. CPI common. This tracks common price changes across the 55 components in the CPI basket, filtering out price fluctuations that are specific to individual components for a more stable indicator of inflationary pressures. These figures for August were steady on an annualized basis in yesterday's Consumer Price Index released from Statistics Canada. BMO chief economist Doug Porter said the 3-month annualized pace of CPI trim and CPI median, plus weaker employment, boosts the case for more BOC rate cuts. Even with cuts expected, outlook murky for housing market. National Bank. New data released this morning show potential signs of life in the housing market, with the Terranet National Bank House Price Index edging up for the first time in 8 months. But economist Darren King writes that even with further BOC cuts expected, it's still too early to say whether this trend will continue in the months ahead. Continuing uncertainty, moderating population growth, the risk of persistently high long-term interest rates, and a potentially further deterioration in the labor market will continue to weigh on the housing market, he notes. The index, which looks at price changes on sales of the same properties over time, rose 0.4% in August, with prices up slightly in Winnipeg, Hamilton, Toronto, Ottawa, Gatineau, and Halifax. Since the end of last year, the national index is still down 4.6%. Against the backdrop of the current trade dispute, market resilience has depended on differing levels of affordability, King writes. Wellcome Canada seeing movement into rate-sensitive sectors, real estate, utilities, commodities. Online trading platform Wellcome Canada has seen investors shift into rate-sensitive sectors such as real estate and utilities recently, CEO Michael Constantino said in comments shared with Yahoo Finance Canada, a sign that he says suggests a cut today is expected. More recently, we have continued to see investors diving into and buying energy names and more broadly the commodities sector, and I expect this trend will continue. TSX futures flat, loonie edges higher ahead of BOC, Fed policy decisions. Toronto Stock Exchange futures are muted ahead of today's BOC rate decision. According to Reuters, futures for the S&P/TSX index were flat at 1,733.40 points at 6:11 a.m. Canada's main stock index closed lower on Thursday, following Monday's record closing high. Shifting to currencies, the Canadian dollar is higher against its U.S. counterpart this morning, rising 0.1% to 1.3752 per U.S. dollar as of 9:02 a.m. TSX futures flat, loonie edges higher, ahead of BOC, Fed policy decisions. Toronto Stock Exchange futures are muted ahead of today's BOC rate decision. According to Reuters, futures for the S&P/TSX index were flat at 1,733.40 points at 6:11 a.m. Canada's main stock index closed lower on Thursday, following Monday's record closing high. Shifting to currencies, the Canadian dollar is higher against its U.S. counterpart this morning, rising 0.1% to 1.3752 per U.S. dollar as of 9:02 a.m.